Hi, this is Eric Gilboord, and you're listening to Sell Your Business for Millions. My guest today is Justin de Vera, a senior advisor with Canadian Financial Plan. Today, we'll be talking about all the insurance products business owners should have to thrive today and sell successfully tomorrow. And Justin, correct me if I'm wrong, but from my experience with business owners, many of them don't really know a whole lot about insurance and their business and group insurance. And I would think none of them really understand the benefits that a group insurance and the things we're going to talk about today could help them with increasing the value of the company and, in fact, in helping them to sell successfully. Is that a fair statement?
Yes, I would say that is a fair statement. And most recently, I had a client who was thinking of selling their business within the year. And I suggested for them to get the group insurance because not only does that add goodwill, it helps maintain all your employees and attract new employees because a lot of people now are looking at the benefits as whether they'll stay or whether they'll go as an employee, and also to the bottom line to the sale. It would add a fair amount to that sale just knowing that the client had the group insurance.
Okay, and what's the wildest group insurance that you've ever done?
Yeah, well, there's like different types. Like,
Okay.
I've done quotes for companies that are close to 1,000, and most recently I have a new plan that I help build even for myself that you can get group insurance up to one person. So before I was dealing with bigger companies, and now I deal with all sizes, all shapes, all sizes, small business, medium size, and large.
Okay, so if our listeners are a one man show, or maybe it's a couple, the owner and their spouse, or maybe it's 5 or 10 or 20 people, that's all good and they can all benefit greatly from group insurance, correct?
Yes, correct, and that's what's the great thing. A lot of business owners do not, don't realize they can do it for their family as well, for them and their family.
Okay, so how does that work? Let's say that you've got a Gen X, owner who's got their spouse and maybe teenage kids. So how would that plan work for them?
Yeah, yeah. If it's just them, they can. There's different plans that we can advise to them. The one that just came out recently is that get up to one employee, and they can have a family plan for him, his wife, and his kids. And the great thing about that is that they can use that as pre-tax dollars and charge it to the corp.
Okay, so they don't have to pretend that their kids are working for the business. They don't have to do any of that. They can just legitimately have their children as part of the plan.
Correct.
Okay, that's good. That's really good. So let's talk a little bit about group benefits and pension as it pertains to small and medium sized business. And again, as it pertains to increasing the value of the business and possibly making the sale even more successful.
Yeah, yeah, that's great. What the great thing about having group coverage is that it's really good to attract new talent, and because you can show them that you have a group plan or group RSP or group pension, and also it also helps you retain the employees because a lot of employees, they if it's whether a bump in like a couple grand or whatever, they would rather have a good benefits plan. In regards onto the sale, that it could add significant to the bottom line because that a lot of companies do not have it, and if they do, it would be very attractive to the bottom line,
Mhm.
and also to attract buyers who are looking for stability, who are looking for good employees, and who are looking for longevity in their acquisition.
So, what would a typical good benefits plan and a good pension plan look like for, say, let's call it a $3 or $4 million business and annual sales, 20 employees? What would a typical plan look like?
That is the cool part about group insurance. It's fully customizable. So
Hmm.
what I do with a client is I sit down with them. and see what they want, where their priorities are, where their values are. Like for example, I have a friend of mine that I worked at McDonald's. He stayed at McDonald's when we were 16, and he stayed at McDonald's, became head of HR, and at Best Buy. And for example, like Best Buy would offer lower salary, but they would offer a great benefits package because they wanted to take care of their employees. And even though the salary was less, the actual package was more because they focused on the benefits. And for like a 20 employee company, you can get a really good plan that that is cost sensitive. And I'm a broker, so I'm able to go to all the companies to see what where they desire, what are they trying to achieve, what is their budget, and what's best for the employees. And even if they want, we can do like employee surveys and things like that, what they're looking for in group benefits, and we can create a plan that's specific for them. And with regards to the group RSP, group pension, we could also that's also a really attractive feature to to help the client stay. Everyone likes a good RSP matching or a little pension or whatever is most beneficial to.
Okay, so what would a typical package look like? Would it have dental, eye care?
Oh, okay,
That's what
yeah.
I'm
So
looking for. What would a normal, if I had a, a $3 or $4 million company, I had 20 employees, what can I expect to put together as a typical package? Let's start with a typical package before you customize. And what would it cost me?
yeah. So a typical package for that would be like, I have a base that I start off of. You have a little bit of life insurance, maybe like 30 to 50,000. A little bit of
Hmm.
dependent life insurance, whichever they wish, and also they have hospital coverage that they have. If they go to the hospital, they would be covered private. They also have travel insurance should they go traveling, like a whether it be like $1 million or something of that nature. And then they go to and then they go the typical meat of it is drugs, services, and dental. So the parameds and dental. So the drugs would be typically like 3 to 5 grand per employee for the year. And a typical paramed package would be about 10 or 12 different services like chiropractor, massage, psychologist, psychotherapist, all those things. And they would typically be about two fifty to 250 to 500 per treatment. And then dental would be, you have different options where if you want to go a bit lower, you'll have like 750, for example, for just the basic dental, which is just your cleanings and those kind of things. Or some people, if they want to give a more benefit to their client, that to their employee, excuse me, they would do like 1,500 for minor, major, and majors including like crowns, root canals, all those kind of things. And
Oh, okay. No,
so that would
that's
be like a kind of like a typical plan. That would be like the base, and depending on what the clients want, it could be anywhere between 150 and 350 per month per employee, depending on if they're single, if they're family, and
mhm.
things of that nature.
So you're saying the employer would pay between 150 and say 300, and would the employee pay anything of that?
That is up to the employee. It's up to the employer. Some do, some don't. Um, it's totally up to the employer's discretion. The max,
Okay.
typically the max is that they cover half. An
Okay,
employee
so that
covers
would be
half.
the normal thing to expect if one went down this road. Now, what about a pension? I mean, I'm not sure that there's a lot of companies that are the size, say, the smaller end of small business would think about actually having a pension plan.
Right.
Just roughly, how would that work?
Yeah, great question. It's just that. So yeah, that would be the group RSP. The pension would be, yes, for more bigger clients. But for a 20 employee or even smaller businesses, they have what's done RSP matching. So basically, they would have an investment for the company, and every all the employees would participate, and they would typically do RSP matching, like 1 or 2 grand would be matched by the employer, and it'll be run by the company. The investments will be they can be chosen from a group of investments that the employers approve, and that's another really nice feature for both the employer and the employee, so that they can. It's definitely an attraction to retain people, and also if you're selling the business, it's also an attractive feature for people to attract people.
Okay, no, that's terrific. Let's talk a little bit about buy sell agreements. As we were talking earlier, and you said that you'd been working on some buy sell agreements lately. How do those work?
Oh yeah. So buy sell agreements are for business owners, like partnerships. Like for example, if you have two partners and one person should pass, they have a life insurance plan on each other,
Hmm.
so that they can buy themselves out of the business. The other partner will be 100%, and then the other and then and then the existing partner will get 100% of the company. So it's something that they put on both partners, which is equal, determined by the valuation of the company, and that way they can, if something were to happen, they would both be taken care of.
So let me see if I understand this correctly. Let's assume for a second we get a valuation and our company is potentially worth $2 million.
Right. So
So
we
tell me how the insurance would work, or the
yeah,
insurance.
so we would get a life insurance plan of $2 million each at the
Okay,
max, or whatever they determine to be a good amount. But typically, it's you can't go past the valuation of the company,
right.
and you would get a specific plan. It would be the same plan for each partner, and that would be it would be the way that it works is the the owner is the company, the individuals, the insured are the individuals, the two owners,
Hmm.
and the beneficiary is also the company. But there's something called a CDA account where they can pay out. It's one partner dies, they're allowed to take out that money tax free and pay it to the family, and the other partner would have for the shares of that partner. So the other partner would have 100% of the company.
Okay. So does that mean that these two partners have already agreed in advance that should something happen to one of them, then the remaining partner gets the other part of the business? And
Right.
for example, the spouse of the partner that passed away doesn't really have any say in it, right?
Well, it would be in the articles of incorporation of the company, so it would already
Okay.
be determined, and already all the legal stuff would already be done before we get to my level. So once that is determined and it's all in writing, all in the articles, then they come to me and say, this is the amount that I want, and this is the what we do. So that, yes, that way, well, typically an owner would talk to their spouse and see if they're okay with that and how all
Hmm.
that works.
So it's a nice, clean separation, and that's interesting because I sometimes, if I'm talking to an audience, or an owner, I'll say to them, "So let's say for argument's sake, Joe, that you passed away, and now all of a sudden your wife was now partners with your current partner.
Hmm.
What would that look like?" And typically, Joe would say, "Well, they hate each other. That can't possibly work."
Hmm.
And so that's where we talk about getting things in order to get your business, kind of prepared in case something happens. So what you're saying is that this can all be worked out in advance, and it's basically a no-brainer. Everybody's protected, and the remaining owner doesn't have anything to worry about in terms of his partner's family coming back at him for the business or anything. It's just nice and clean separation.
Correct, correct. Because as you know, if there isn't an agreement beforehand, it can get pretty ugly.
Well, yeah, I think many of us in my business have found situations that have gotten very ugly. In fact, they've gotten ugly amongst family members, kind of fighting with each other. But what you're suggesting is this is all worked out well in advance. There's no going back, and it's all been predetermined.
Correct, and then that's all in the article, so that there's no ambiguity. And also, it's just. But what's interesting that you say that, because I just spoke to someone recently, and there's a stat out there that 80% of business owners over the age of 50 do not have like a succession planning or anything of that nature. Or we're talking that later on about legacy planning.
Yeah, it's like 75 or 80%. It's
Yeah,
shocking.
about around there. Yeah.
Yeah, it's shocking, and the reality is that for many people in with small businesses, typically their legacy, their the future of household co-op for business succession or legacy planning. Let's chat a little bit about that.
Yes, yes. As we spoke before, about 75 or 80% of business owners over the 50 and over do not have business succession or legacy planning, because I know everyone's so focused on their business and things like that, or sometimes life insurance and things like that can be a very uncomfortable conversation. But it's
Hmm.
something very important to have, like you mentioned, taking care of your family and things like that. It's just as important as taking care of the business as taking care of what's going to happen should something happen within the business. And when it comes to holdco opco, if a lot of different companies have different setups, and it does get pretty involved. You do have to sometimes include the accountant, the lawyer, and all these things, so that to make sure that everything is set up correctly, so that when something does happen, everything will go smoothly.
So, would you act as a quarterback in this kind of situation?
Correct, correct. And then I'll
Okay,
just
so
make
that would be
sure.
your role in the holdco, opco, what have you.
Yes, because some people have just one company, some people have many companies, and just the structure of that is can be very complex, and you have to go through a lot of training to understand where everything belongs, and you have to deal with the accountant. We get the insurance company involved, and the lawyer should it need to be involved, just so everything is set up correctly, so that everything is at the optimal for the client,
Hmm.
and the client is taken care of.
So the business owner really doesn't want to try doing it himself, right? They definitely want someone like yourself in there coordinating everything.
Yes, definitely, because we definitely want to make sure that everything is optimized. Like like I said, with the insurance company, the with the accountants and lawyers and things like that, so that everything is set up properly for what the owner is intending.
Okay. Let's
And
talk about key person insurance. I think most business owners have heard the term. Some use it, some don't. But in your experience with business owners in kind of small, medium sized companies, what percentage would you say had key person insurance? What percentage didn't?
um, it just depends on the size of the company. A lot of the smaller companies do not have it, but the larger companies do, because you know, for example, key person insurance can be a lot of different things, whether it be upon death or upon their injury, or they cannot work. A lot of, like, for example, I had one recent client. The reason why they do that for them is because this person is so vital into the corporation that if they passed away,
Hmm.
they would just wind up the company. So,
Well, that sounds like most small businesses,
right, correct. So,
or many small businesses, and clearly they're the ones who probably need this kind of thing the most.
yes.
What would it cost then for a key person insurance? How would that work?
Well, a key person insurance is just like a regular insurance policy when it comes to but it's just how it is set up. A lot of people don't know how to set it up when it comes to advisors and things like that. One thing I realized when it came to business, I thought everybody knew it, but I had one client say that to me, for example, I'm doing this, but I came back to you because I went to like a bunch of other people and they didn't know how to set it up properly. So a lot of when it comes to the cost, it would be the same as, for example, if they were going to get their own life insurance policy when it comes to cost, but it's making sure to set it up properly so that the business is taken care of.
And also, so the business pays for it, correct?
Correct. So, yeah, the most important thing about life and everything that we're talking about is we're using pre-tax dollars,
Hmm.
and so that way we can maximize the owner's gains and minimize the owner's expenses.
Okay,
And
great.
that's even though like it does take a lot when it comes to business to set all these things up, it's very valuable to to everybody in the business, and like you said, peace of mind and taking care of their families.
So here's an interesting question. Um, could I get key person insurance for one of my employees who's, key to the company?
Yes, yes, it doesn't have to be you. It's whoever's that story that I talked about.
Hmm.
That key person was not one of the owners, but it was the key person. So it can be on whoever you decide is the key person. That usually is the person that runs the show. And
See, that's interesting because in all the conversations I've ever had with business owners, the few times a key person insurance popped up, typically, the go to position is, well, key person insurance for the owner or partner,
yeah,
something like
yeah,
that.
yeah,
But it starts to make some real sense because with small, medium sized businesses, when you go in and you're looking at it from a buying and selling perspective, and buyers tend to look at the employees as much as they look at the financials of a business. And typically you find this person, and this person are absolutely key to the success of the business and key to the future short, medium, and long term of the business. But it would be interesting if somebody came along and they were a buyer and they discovered that, yes, Steve is really, really key to the business. However, we have key person insurance for Steve. That probably would make a difference in their mind in terms of, one more box checked off for potentially buying a business.
yeah. Correct. I mean, you want to make sure that everything is stable within the company, so that when you acquire it, if something were to happen, that not only that, you also want to know it'll be really good for the seller too, to show that they have foresight and they've taken care of all these things. And someone who's acquiring that will see, okay, this person has really thought about the company, has
Very
really
true.
taking
Very
care
true.
of it and really knows what they're doing, so that that will be really attractive to the buyer, because it makes a seller in a great light. And by the way, key person insurance can be whatever. It can be different things. It could be like, if they're disabled, then you have to hire a replacement. That would be a monthly salary that you can use to hire the replacement. If they have critical illness, if they have cancer, for example, then they can have like a lump sum to pay for whatever they need to replace that key person. Or like I said, the life insurance, that one scenario that I told you, if that person dies and they want to wind up the company. So there's very different ways to set things up
Well,
depending on the structure of the company. And yes, you're right. Most small businesses are typically, two owners or something like that. But other small businesses, they have investors and the person's running it. And so there's all different types of setups for small business. And I've dealt with just a bunch of different kinds.
well, that's terrific. So, when one wants to get key person insurance for Steve, I guess from your side of the table, you look at what Steve's contribution is, perhaps what it might cost to replace him, short term, permanent, not permanent. I guess there's a whole bunch of different things you have to look at to come up with the right sort of package for key person insurance. Does that make sense?
Yeah, yeah, definitely correctly. And you just want to make sure that, when they talk about business continuity, you want to make sure that the business is healthy and it's not dependent on just one person, and that you can replace that person even though you don't want to, but you want to replace that person should something were to happen.
So it sounds like a small price to pay to have key person insurance for maybe one or two or even three, key employees in a company.
Well,
So I guess my question is, when you're dealing with small businesses, um, I would imagine most of them talk about key person insurance for the owner or partner, and likely less talk about key person insurance for employees. Is that true?
well, yeah, typically more it's for the owners, but like I said, if if it's owned, sometimes you have investors, and
Sure.
someone else is running the company, but he has all his investors,
Hmm.
and so that's why they would put that on that one person. And just to further what you said before, yes, I mean, yes, there is a cost to the insurance, but you are correct that the value of insurance only really becomes available when you need it, you know?
Hmm. Hmm. Well, the
Then
story
you
about
wish you would have got it, you know? And
yeah, it's
then this way,
insurance, but it's interesting because I mean, I've learned something that I think is very valuable to someone who's entering into the area of buying or selling a business. I mean, I guess it's something that I'm going to suggest to owners from now on, because the term key person always comes up in conversation. And I'm going to ask the question from now on, do you have key person insurance for Steve or Joe or, or whomever?
yes.
And my guess is what I'm probably going to hear, and you would know better than I would, but what I'm probably going to hear is, no, we never thought of it.
Yes, that's
Yeah.
typical common with insurance in general. And I get it because businesses, they're just focusing on getting the business off the ground, right? But,
Or
you got to
running the
know,
business.
you got to
Yeah.
have the longevity, like, you got to think if when my business hits it big, I want to be able to have all these things in place should when I become big. And also as well is that, if there's anything that comes awry, like when you have that, you'll thank your lucky stars that you have that, you know?
Yeah, I'm just sort of thinking through the scenarios, and with companies that I've dealt with, owners that I've dealt with, and I can actually think of a few right now. One's a $25 million uh, company, and it's not just the owner that's important. Clearly, the owner is, and clearly the CEO. They're important, but there's a handful of senior staff that have been with them for a long time. That God forbid something happens to them, unless they've had people shadow these other people, which not everybody does. It could be, a big kink in the plans of the company if somebody suddenly had an accident.
Yeah, and
Wow.
another great thing about that is it forces you to look at the structure of your company and how your company's running. And maybe you wouldn't have thought of that before, and who's important and who you need to take care of, because you know what happens. Like if you don't take care of the right people, they will leave.
Yeah, exactly. So it sounds to me like you've had your fair share of experience in dealing beyond insurance, but just working with the owners, working with the kind of the management, if you will, and advising as an outside resource on, these kinds of things. Is that true?
Yeah, yeah, that's my basically my specialty. In my 20-year career, I've worked on Bay Street, and I've done a lot of deals for a lot of big public companies, and also, so it's helped me to understand business on a larger term, and also on the smaller term. What I always say is the great thing about business is it's its own language. So if you can speak business, then it doesn't matter what sector the company's in. Business is business, whether it be
No, it's true.
whatever, whatever, whatever. And once you understand business, you can. Business owners love talking business, right? And then
Yeah.
you show them the value add by showing that you know business and you want to take care of their business and you want to make sure that they're positioned correctly, whatever they want to do, whether they want to have an exit strategy of whatever amount, or everyone should always have their plans should they should they come to a certain size, what would they want to do?
Yeah, and it makes sense that, because I'm willing to bet that not everybody in your business understands business. I mean, they may come in and talk insurance, they may talk products and services, but unless they have a greater understanding of business in general, I think they're at a little bit of a deficit in terms of advising owners fully.
Yeah, and I'm starting to realize, like, someone like yourself and other people have told me that, I had I had not realized that. I'm kind of the type of person that focus on what I do. I don't really focus on what anybody else does, but
Hmm.
I'm starting to realize that. And one of my clients most recently just said, I talked to like a bunch of other guys, but I came back to you because you understand business. And yeah, that is one of the great things that I have. And even myself, like, not too many people can do group benefits and group RSP because I understand investments, as I understand insurance, as I understand business. Like for example, like I'm also helping a client for, with a franchise his restaurant, and
Hmm.
even talking to franchising, I don't know franchising that well, but I know business. So even though there are certain things I don't know about franchising, I help them understand the business part of it.
Okay, so with you, it's more like a quote unquote partnership with your clients. Um, Even if it's not in a formal sense, it's from a advisory capacity.
Yes, correct. And I have a lot of partners that I work with. I want to grow with the business. Let's say we
Hmm.
started 10 employees, 20 employees to go to 50 to 100. I know what they need, and I have all the people set up to help them out, whether it be because, for example, like typically in a company under 100 employees do not have HR, but they do have a payroll person. So they might need
Hmm.
help with, certain, exits or certain things like processes and things like that. So I
Sure.
help them with that. If they need help, now I've gotten too big, I need accounting. So I help them with that, and bookkeeping, help them with that, or, certain lawyers and things like that. And I help them with that. And of course, group benefits, all the things that we're talking about, group benefits, group plans, buy sell agreements, legacy planning, the key person as well, because my whole thing is to take care of the client as a whole and to be with them as they grow. I would love to see. I've seen it many times. When I worked on pastry, like, companies can go from 10 to 100 very easily, and I'd love to see help them do that and help them grow.
So you see yourself as having a seat at the table.
Oh yeah, definitely. And
Well, and that's a very different approach than perhaps some of your, others in your industry, in terms of insurance. And if I was in a smaller, medium-sized business, I think I'd like to have that extra, advisory ability available to me. It just makes sense.
yes, yes, definitely. And that's the value add that I provide. It's not just the insurance, but the business knowledge and someone that's going to help you as you grow and protect your interests as you grow.
Okay. Let's move on to business overhead insurance for expenses. Okay, that's a lot of words. What does that mean in
Okay, that's
layman's
great. I mean,
terms?
I'm doing one right now for a client. He said, "Well, if something happens to me, at least I want all the expenses to be covered, so my family who runs the business can take care of it. They don't have to worry about money." So, business overhead insurance would help. Would cause if a key person or like an owner would become not able to work or things like that, then at least for a period of time, the business expenses could be covered and they don't have to worry about winding up the company or the company going down because at least the all the operations are covered, all the meat and potatoes are covered, and the family doesn't have to stress out that they have to produce or perform as well as that person.
So let's take let's go back to, say a $3 million business, and, it has X amount of dollars as monthly, monthly cash flow, monthly requirements, payroll, and all the other stuff. So you would work out what their typical expenses might be, their typical overhead for a period of time, and then your insurance would cover those expenses for a period of time.
Correct. And the benefit about me as well is that I'm a broker, so I deal with all the companies, and I will tailor a plan that is most beneficial for the client, whatever suits them
Hmm.
best.
So let's say that I had a company, again, let's call it a $3 million business. And I wanted to make sure that my family didn't have to worry because something happened to me. Could I then work with you to determine that we needed, $100,000 a month for 12 months for me to feel comfortable that my family wouldn't be in trouble? Is that something that makes sense?
Well, it just depends on a lot of different scenarios because they ask for income, they ask for revenue.
Okay.
You have to sometimes provide all the information for the business. But what I would do is whatever that they wanted, if they wanted 100 or 50, whatever it is, I would make sure that even if I couldn't get the 100, I'd make sure I get as close to that as possible so that they can feel comfortable.
Okay. And the insurance, the purpose of the insurance is to cover expenses
Correct.
slash overhead. Now, that doesn't necessarily mean that the business can stop running. It just means that, or correct me if I'm wrong, or does it mean that it it just covers the business no matter what? Like how would it work? You know,
Okay, so
let's take.
I ideally, in the most ideal world,
Mhm.
it would cover all the expenses so that even if they made zero sales, everything would be covered, you know? And obviously that doesn't happen, but it's just that's like the philosophy that
Right.
you would cover yourself for that period of time so that, so that at least the business is taken care of. And even though, let's say, because of you, revenue takes a 50% hit, right?
Mhm.
At least you're covered during that time so that you don't have to worry about, like I said, being in debt or
Right.
basically having to wind up the company.
Right.
Because as we found out in COVID, right, a lot of small businesses are 3 months away from shutting down.
Well, and that's kind of where I'm getting at. So the insurance company um, agrees to a certain number, and does that translate to, okay, Joe, if you lose 50% of your sales, we'll make up the gap? Is that kind of how it works?
No, it would be based on the expenses. So, okay, let's say I own a business and I have 20 grand of expenses a month.
Okay.
So the way that I would set it up is, if they have 20 grand of expenses, so we'd set it up for 20 grand so that if something were to happen, then at least the business is covered for that period of time. So that even if you're making 50, that's 50 profit. So that
Okay. So, all
as an
right. So,
owner, it would give you peace of mind because if something were to happen to me, then at least I know my business is taken care of.
okay. So let's take the scenario. Something happens to me. The business continues. I don't draw on the expense insurance. Is that kind of what happens?
No, you would get it as long as you're unable to work. So as long as you were injured for that period of time for that we set up the policy, let's say it's 2
Even if
years
the
or whatever
business was
it is.
doing, but even if the business was
But it
doing,
doesn't matter what the business is doing. Correct.
really, so they could be doing their regular business anyway.
Correct.
Oh, that's
Correct.
interesting.
That
Okay.
like the revenue, it's based on the revenue that you're making now, not what you're making in the future, right?
And
And it's
it's
based off of the expenses. So
right.
what I typically do is I make sure that I have everything of their expenses and make sure everything's documented and I get it pre-approved so that we know should that happen, everything would be covered. And yes, you're correct. Let's say nothing. Let's say sales don't move an inch, then that's all profit
Hmm.
for that period of time.
Well, so because you're not there, you're still collecting the business is collecting the insurance for the expense.
Correct. So for typical business plans,
Hmm.
the owner is the business, the beneficiary is the business, and the insured is whoever you choose, whether it be the owner, the key person, or whoever that is.
Okay, so this is not a get rich quick scheme for someone.
No, no, no.
This
This
is
is for, yeah,
this is
yeah. Unfortunately, the way that I speak to people, if people are talking like that, then it's a scam. You know, this is longevity thinking. So
yeah.
yes, it serves you in the long term,
This
but
is
in the short
staying in business, not
correct,
going into debt, not going into because what I've seen happen is businesses, can typically they can go into a spiral. And once
correct,
they start going into that spiral, there's no turning back. And what was
right,
once a viable $2.5 million widget making business is all of a sudden bankrupt.
correct. And I mean, obviously, I'd like to think that you're always in the optimal. You're always at 100%. But what happens if things switch and things like that? This
Yeah,
is what protects you, so that if for the unforeseen things that don't happen, and yes, some people can think, well, that's a cost if it's not going to happen, but when it happens, it saves you. You know,
yeah,
so
for sure.
you have to with insurance, with all types of insurance, you have to see the future value of it.
Yeah.
So, and it definitely, I don't know how many people told me, like, I wish I had this, I wish I had that, I wish I had this, but you know what I mean. The only way to really protect yourself for that is to have those things in place, and even if it doesn't, if you don't have to use it, at least you were protected. And like I said, if you chart the corporate plans, it's taking after pre-tax dollars.
Yeah, so your job is to bring these kinds of things to the attention of the owner so
Right.
they understand they have these options. I'm not sure that I've ever met an owner. I mean, I'm not in the business, so I wouldn't normally talk about insurance, but I don't think I've ever had I know I've never had a conversation with an owner about business overhead insurance for expenses. Never.
Oh, interesting. Okay. Well, I mean, that's why I said my value add is providing everything for the
Hmm.
for the owner so that they're protected from all sides.
Well,
Even if, like, whether it be liability insurance, anything that they require, I help them do that so that if something were to happen, they're protected. I'm basically trying to help them succeed at the optimal so that when
yeah.
something happens, when you get a curveball, you can still hit it out of the park.
Well, and that's the key here that I'm learning is that that's part of your job is when the unexpected comes, they're prepared. And
Correct.
it's your job to bring all these tools to the table so that they're ready for anything.
Yeah, and my whole thing is I hope this doesn't happen, but if it does happen, then then you're prepared. And
Well, when you start talking about boomer business owners and even older Gen X, they're getting to an age where that's where the funny things start to happen. That's where the
right.
surprises start to happen. If you would have told me a few years ago that no, not only was I personally going to have one hip replacement, but I was going to have two, I wouldn't have, I wouldn't have believed you.
Well, especially in the last couple of months, that's kind of been the sentiment, right?
Yeah,
Oh, most business owners, their typical friends are also business owners, right?
yeah,
And
exactly.
oh, this happened to my buddy, and I don't have coverage. Like, for example, like one of the owners basically said to me, like, you hear that accident on the 400? Yeah, that was my friend, and I don't even have
Wow,
life insurance. And I've been talking to him about it for years. He goes, finally, he got it because you know,
wow,
and
interesting.
that goes
So,
for.
what about disability and critical illness? Let's just cover
Yeah,
that
well, I
off.
mean, it's so important because if somewhere like a owner or someone or a key that part that goes into the key person, if someone were to get a critical illness or a disability, then that would be debilitating. And most people, the most claims, like, you only die once, right? But the thing that you're going to use the most is actually disability and critical illness because you're gonna 50% of the people get cancer. You know, about around 50, and disabilities, injuries happen all the time. So you want to protect yourself from that should something happen. Then, like I said, you want your business to continue to run, and like for that key person or whoever you want, like, you want to be able to replace them, have the money there available, so when you need to replace them, that you can.
So when you say replace them,
I mean, sorry, if they're disabled for that for a certain period of time, then you can have that certain amount a month Or when
Hmm.
it comes to critical illness, you'll have a lump sum so that the business can still run while that person is injured or has a critical
Sure.
illness.
And that person could be on the assembly line, it could be VP sales, could be, middle management. It could be anybody, right?
Yeah, and I think that's the value of looking at insurance as well. You're really looking at your company. Maybe you don't realize how important certain people are, and in reviewing your whole company, you can see, okay, this is what's needed and that's what's needed. And, it's, like I said, it's helping the owner with forward thinking so that,
Hmm.
help them foresee problems that they don't know might come.
Yeah, it's they're going to benefit from your experience in dealing with lots of business owners, and you do most of your business with business owners, correct?
Yeah, about like 90-95% of my clients are business owners, and I enjoy it because I enjoy talking business as well. I like business, and it's with business policies, there's a lot more involved, but it's also, for me anyways, it's a lot of fun.
Oh, no, that's
I, I
terrific.
I take pleasure in the fact that I'm protecting a business, I'm helping them grow, and I like seeing small business succeed personally. And so that's why, for example, with the group insurance, I'm so happy that during COVID, that a lot of the group benefits, they lowered their numbers to like 3 employees, and then I even like having to offer for the 1 employee because I love business and I love people succeeding in business, small business or whatever size business that you have, because to me anyways, that's a backbone of our economy.
It is. I couldn't agree with you more on that. So, I've picked up a few things that I actually had no idea about, and we've talked about them, and I really appreciate you coming on. How can any business owner get in touch with you, or their CFO, or their investor, or their spouse, or anybody? Actually, how can
Well,
they get
yeah,
in
yeah,
touch
no
with you?
problem. Like, actually, it's kind of funny that you mentioned that. I forgot to mention, like, I actually have more experience dealing with executives, business owners, and because more than the public, because that's just always been my background. Like when I was, I was always dealing with, either portfolio managers, CEOs. Typically the person that runs the group benefits and things like that is like the decider would be CFO, head of HR, VP finance, those kind
Right,
of
right.
things. Yeah. So the way that they can get a hold of me is my phone number 647-465-2720. My website is www.canadianfinancialplan.ca, and my email is justin@canadianfinancialplan.ca. And I just want to say I really love small business, so I'm hoping that a lot of people are making those kind of exits, and I want to help them get there and set themselves up so that they can succeed.
Well, they are, and there's a lot of activity right now, and it's never too late to incorporate the things that you're talking about. And as we said earlier, not only does it help the business today, it likely will help influence the purchase of business because, as you said, the owners thought ahead about some of these issues that perhaps a buyer hasn't thought of, themselves. So I think
You
that's
know? And I
that's
also want to
terrific.
mention, like,
Hmm.
working in the investment industry is just not just buyers, but like like portfolio managers and all those kind of things. The first thing they look at is the stability and the quality of the management,
Hmm.
right? So if you have all these things in place, that's a value add because they know, okay, I'm buying this company, I know it's set up properly, I know this guy knows what he's doing, because that's what you're really buying.
Yeah, no, absolutely. I couldn't agree with you more. So thank you for being a guest on our podcast, Sell Your Business for Millions. I really appreciate your knowledge, your experience, and your input. And I do hope business owners or their HR or CFOs or what have you get in touch with you, and at the very least, just have a conversation. because in all likelihood they're probably missing out on something
For sure.
that you can bring to the table. So Justin, thank you very much. I appreciate this, and
Yeah,
we'll
thank you.
talk to you again at some point in the future. Take care.